Hey, it's Amanda and Brandon Neely again with Grandma's Wealth Wisdom. Now, again, obviously, we are not Grandma, but we have learned that she has some great wisdom to share with us. She shares her time-tested wisdom about managing cash flow and leveraging assets.
Today we're going to be talking about rethinking your tax refund. Now, lots of people, especially around the first, second quarter of the year, get really excited about their tax refund, and they intentionally make sure they get a big refund by having more withheld from their paycheck throughout the year as a way to have a forced saving strategy.
They've already spent it in their head too. Sometimes.
Right. They already know, like, I'm going to make sure I get this refund so that I can spend it that summer for vacation, or if I went into credit card debt, I can pay off that credit card debt, or if I have a big emergency come up, like my car needs new tires, I'll have this tax refund, I can cover my basis. And this is really their forced saving strategy. Now, that's what they're doing. And even if they, one of the easy things to imagine is that they're going to get their tax refund. Let's say they get it in March, right? Because they file like super early. But they have an emergency in January, can't get access to that money until the IRS decides it's time to send it to you. Which brings me to a fun fact about taxes and how things were set up. So originally, the first year that we paid taxes here, income taxes in the United States, was in 1914, and tax day was March 1st. And then later, I think in the 50s somewhere, they moved it to March 15th. And then at some point, they moved it to April 15th. And they said it was just because there are so many tax returns, we need to have more time to be able to process them. Because the time between like February 1st and March 1st is too short, basically. So let's move it to March 15th, and then they moved it to April 15th to give themselves a longer time. But if you think about this, once the IRS has your refund ready, they have to pay it to you within 45 days or start paying you interest. So that means if they extend the deadline for when to file, they get to send you your refund later, right? Or more and more people might wait till last minute to file, and they get to hold on to that money longer. Why would they want to hold on to that money longer? Because they're getting it growing for them. They've got it somewhere that they're keeping it safe and liquid so they can still pay it to you. But in the meantime, they're getting some kind of interest on it, right? Some kind of yield on that money. But what if you could get that instead? I mean, kind of having more withheld from your paycheck each pay, right? And then getting a big tax refund, isn't that like giving the Internal Revenue Service an interest-free loan?
Yeah, they gave your money back to you at
0% interest, right? Yeah. What if instead you could set up a different forced saving strategy and reclaim that money for yourself and get growth on it rather than, loaning it to the Internal Revenue Service at 0% interest? So if you're getting a big tax refund, this is the kind of thing we want to talk with you about, how you can flip that around so that you get your money working for you in a different way, still be able to do those vacations, still pay off that credit card debt, still, replace the tires on your car, whatever it is, but get the growth on that money as well.
So we shared this strategy with our tax guy. Our tax guy is pretty awesome. Not only is he a great tax person, but he also has a bounce house. And we've used his bounce house for our own summer parties. And if you can find a great tax strategist and also somebody who will loan you their bounce house,
all in one, yeah.
Win-win for me. So, as we shared this strategy with our accountant, he was just blown away and said, "Why didn't I think about that? I should have done this," or what? All kinds of things that really he said to me.
Yeah. So here's the idea, and you can decide if this is right for you. You take what you're having withheld from your paycheck that you know is extra, and instead you have that paid to you instead of going to the Internal Revenue Service. But You know how like maybe possibly with your paycheck, you can have it go to two different accounts. Maybe you open a savings account and you have that extra go to that savings account rather than to your normal checking, and you forget that you have that account. You set up the difference to automatically go there. So it's in a safe place that's not easily accessible. Even better, rather than using a savings account, you could put it into grandma's strategy so that it's a little less accessible, but still accessible when you need it, and starting to grow with compound interest.
And then interest, another great word.
Yep. And then you only use it for the things that you would normally use it for anyway. Those car repairs, the vacation, paying off the Christmas, money that you spent, all those kind of things. Like, so for example, you're not going to all of a sudden go buy a Lamborghini because you've got that money saved up when you would have bought a compact car and, a used compact car in the first place. You don't take a trip to Africa if you would normally just do a road trip in the U.S., right? You do the things that you normally do, and you're going to use your savings account to do that, or your grandma's strategy to do that, rather than your tax refund each year. And the key with this is that every time you get a raise, every time you get a pay increase, every time you change jobs, whatever, you save a little bit more, because you would have had more withheld from your paycheck. You would have sent more to the Internal Revenue Service each time you got paid. So continue to do that. Continue to save more and more as your income increases. And then you're going to have more and more there for those major expenses, for your eventual retirement, for your kids' college, whatever the big things are that are also in your future. So that's the idea, how to rethink your tax refund. Now you've got the inside scoop. It's 2020 when we're recording this episode, and all of the politicians out there are going to be talking about lowering your taxes. The average Joe, your taxes are going to go down. They're going to promise those kind of things every time.
I feel like it's the same political promise.
Yeah, but what you can do is outsmart the average Joe and get your tax money working for you. Not giving that 0% interest loan to the Internal Revenue Service anymore, but still having a forced saving strategy that makes sure you've got the money for the things of life as they come up. And our guess is that the politicians that are behind those podiums on stages are doing the same thing with their own money. We're totally guessing that that's true, but it probably is.
Well, there is some stats that show some of them have and are in the past and present.
Yeah.
You can't see it always, but I say a good portion probably are.
Yeah. So for more unique strategies about how to beat the average Joe and rethink what's become traditional wisdom and go back to the time-tested wisdom from our grandparent generation and beyond, be sure you hit subscribe to this channel, to Grandma's Wealth Wisdom, and go to grandmaswealthwisdom.com/free for additional free resources to help continue your learning.
So thanks for watching and including us on your financial freedom journey. We hope that this helps you reach a smart, stable financial future. And we'll catch you next time in the next video or podcast at grandmaswealthwisdom.com.